Good afternoon and welcome to your weekly FX Options Report. Today is Wednesday, November 3rd, 2010. In midweek trade, the FOMC announcement does remain in focus. The Fed's two-day meeting comes to a conclusion today, and investors are paying close attention to any announcements regarding the quantitative easing measures. And for midterm elections, the Republican Party won control of the House of Representatives, while Democrats held on to a majority in the Senate. It is heavy on the event risk calendar this week, with the October jobs report coming out from the U.S. on Friday morning. Ahead of the non-farm payrolls report, the ADP reported that U.S. Private employers added 43,000 jobs. And the ISM Services Index rose to 54.3% in October from the 53.2% in the prior month. U.S. Factory orders strengthened in September, rising to 2.1%. Meanwhile, overseas economic data releases from the UK surprised to the upside. The UK Services PMI for October rose to 53.2 from 52.8 in the prior month. And moving on to the spot FX market, the dollar is trading on a mixed note, higher against the euro as well as the yen. Also, while we're on the topic of central banks, the Reserve Bank of Australia surprised markets by raising their target interest rate by 25 basis points to 4.75%. Following that rate decision earlier this week, the Aussie dollar reached parity against the U.S. currency. Looking ahead to Thursday's session, both the ECB and BOE will be announcing their interest rate decisions. Now, one way to trade your view on U.S. dollar strength or weakness is to take a look at ICE's FX options. One advantage is that they are U.S. dollar denominated. For more information, you can go to www.fxoptions.com. And in our daily trend opinion, we'll take a look at the major ICFX option pairs, starting out with the AUX, the U.S. currency against the Australian dollar. Now, for that pair, the key short-term resistance stands at 107.25. The RSI has just struck against its neutrality area at 50% and is reversing to the downside. The preference of trading central analysts for the AUX is short positions below the pivot, which currently stands at 107.25, with targets at 97.15 and 93.50 in extension. Moving on to the BPX, that pair is under pressure. Now, that pair is breaking below its support and should face a weakness as the RSI is badly directed. The preference of trading central analysts for the BPX is short positions below 64, with targets at 61 and 60 in extension. And moving on to the CDD, the U.S. currency against the Canadian dollar, the downside does prevail. Now, the RSI is capped by a bearish trend line, and the preference of trading central analysts for the CDD is short positions below 105, with targets at 99.50 and 98 in extension. Moving on to the EUI, the U.S. currency against the euro, that pair is under pressure. Now, it has struck against its resistance and should face a further weakness. The RSI is capped by a declining trend line. Therefore, the preference of trading central analysts for the EUI is short positions below 73, with targets standing at 70.50 and 68.40 in extension. For the SFC, the U.S. dollar against the Swiss franc, that pair is also under pressure. Now, the SFC is posting a rebound right now, but does stand below its new resistance. The preference of trading central analysts for the SFC is short positions below 100, with targets at 94.25 and 92.30 in extension. And last but not least, for this segment, let's take a look at the YUK, the U.S. dollar against the Japanese yen. The downside does prevail for that pair, and it has struck against its declining trend line. It does remain under pressure. Therefore, the preference of trading central analysts for YUK is short positions below 84.50, with targets at 79.30 and 76.50 in extension. Now, moving on to our weekly trend opinion. Last week, in terms of dollar movement, it did resume its weak trend. Now, trading central analysts did take advantage of this and book new profits in their virtual portfolio and saw a 100% gain on their AUM call. Now, in terms of portfolio performance, since its inception, since August of 2007, it does stand above the 2000 level, and it currently comes in at 2008.9%. Since the beginning of this year, January 2010, it is higher by 728.8%. We do have two trade alerts for you right now, including a put on the BPX and calls on the EUU. Now, starting out with the BPX, trading central analysts do recommend puts on that pair because it should face further weakness. Now, the daily RSI is capped by a declining trend line. And regarding buying calls on the EUU, that pair is shaping a triangle continuation pattern. It is expected to post further gains. This week, trading central analysts will also be looking at the YUK and the SFC. Moving on to next week, trading central analysts will watch out for any U.S. dollar strength for the opportunity to enter new short positions against the U.S. currency. Now, trading central analysts will be looking at the CDD, the PZO, the NZD, and the AUX. Starting out with the CDD, the U.S. currency against the CAD, it is under pressure and currently breaking its intermediary support. Now, further weakness is likely to come in at 99.50, which is also the next target. For the PZO, it is shaping a similar pattern to that of the CDD and is approaching the 121.50 level. Onto the NZD, has broken below support and its previous low at 131.50 should face further downside as the daily RSI is badly directed. Last but not least, for the AUX, it is also on the downside but does not show any reversal signs. And that does wrap it up for your weekly FX options report. Make sure to tune in next Wednesday for your latest update. Thanks for watching and have a great day.